Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting the Asian Session Live Market Analysis webinar, giving the derived forecast for this week, 7th to 11th of September, and also the levels in which the currencies are expected to swing during this particular period. Besides, I'll also touch upon the market reading, how noting down the initial lows and the highs around 3:30 GMT, we'll be in a position to identify the intentions of the traders or of the players from time to time, and then plan our trades accordingly. So these things are concerned with the market reading and the forecast, so that we'll be in a position to take an appropriate decision that whether we can do a buy and sell trade or a sell and buy trade. Okay. As long as we are human, we are bound to make mistakes. Then, in the event if the market goes against our expectations, what remedies we have, or what are the preventions we have so that our equity does not erode, then we need to have the trading strategy for that. After committing the position, either we should exit the position with a loss if the market is going against us, or we should be in a position to limit the risk by keeping the hedge order. Instead, if we simply watch the market and pray to God that the market has to move in our favor, then probably it may test our patience. So to avoid it, we need to have the trading strategy. One of the simplest trading strategy is to use the hedge order. And the platform providers, other than US platform providers, they offer this hedging facility. So you can ask them to provide the hedging facility in your trading platform, so that suppose you've got a buy position in euro, you will be able to place a sell hedge order, so that if the market goes against and the sell position will also open, so that buy as well as sell you will have in a distance of 30 pips. And so when the market make upward and the downward move, you'll be able to close both the positions with a profit. So that way we'll be able to handle this, provided you use the hedge. And also you have to keep the hedge order beforehand. And many of the people think that I'm keeping the mental hedge. Let the market move again, then I will try to hedge. But invariably, I have seen them after the data release, when the market goes about 100 pips upward or the downward, and then suddenly reverse, or the upward move, they hedge it, and later on they see that the market is moving in their favor. So they need to understand that the hedge order has to be placed beforehand. As soon as the position is committed, the hedge order has to be placed. And sometimes you come across the slippage in the platforms. So you have to tell the platform providers such slippage is not permitted when the order was there, limited order was there. And if you try to fight with them and insist upon, then they will reconsider giving the positions. And if you don't ask the platform providers, then they will not bother about, and they will continue to give the slippage, because the platform providers earn out of your money. Now let us go into that of the forecast for this particular week. Now this is the second week of September, so we are expecting the trending move. And in the month of September, they are expected to show the mid-month reversal. Mid-month reversal is expected to happen during September. So what they intend to do during the second and the early part of the third week, they will try to make the downward move in the case of euro and GBP. And afterwards, mid-month, they will try to reverse the market, start gaining the levels in the case of euro and GBP. When euro was facing enormous crisis, like the Greece crisis, etc. At the time, euro came down to 1.06 or 1.07 and things like that. Now there is no such crisis. Why should euro fall? Probably the best answer you could get will be on Friday. The non-farm payroll was less than expected, 173 against 200 plus. And everybody thought that euro and GBP will go up because it is USD negative sentiment. Obviously, euro and GBP should become bullish. But unfortunately, what happened? Euro and GBP started making the downward move. That is what I was explaining in my last week forecast. For non-farm payroll, they are expected to make the downward move to start with during that of the late European session and also the early part of the US session and firm up towards close. So that is what they had done it. So in that process, you might be thinking that, okay, the non-farm payroll is negative, so or less than expected. So euro and GBP could go up, but they will simply make a downward move against the market sentiment. And once they continue to make a downward move, then all will become bearish, thinking that the big players are exiting out of the market. And the big players can never leave the market because they continue to keep the money in the market and continue to play. It is something like catching hold of the tiger's tail. Once you catch hold of the tiger's tail, or you catch hold of the tail of the snake, you need to continue to rotate. And you need to continue to rotate non-stop. If you stop, then immediately the tiger will catch you. So it is a vicious cycle. So the players, whether they like it or not, whether they wanted to retire from market or not, it is not possible for them to abruptly leave the market. And their money has to be deployed in the market. And that is how the system is. So you find the traders think that, okay, it is a debt trap for that of the traders when they overtrade and then later on they find their account is vanished. It is the same situation for that of the players also. So they become the richest in the world and afterwards in order to sustain the richest conditions and so that their names will come in the Fortune 500 or whatever it is. And later on you will find that it will simply vanish. And you just refer to that of such Fortune 500s of 20, 25 years and find out their aftermath or what happened to them later on once their names were removed from that of Fortune 500. Then you find many of the people were not able to transmit the wealth to that of the next generation. And see, the basic idea of accumulating wealth is to lead a comfortable life so that their children can happily live without even making an earning. So that for several generations, they will continue to be rich. That is what the human beings think. But God's thinking is different. Such rich men, when they are put into problem, they lose all the money and transmit the debt to that of the next generation. That is the unfortunate situation. So man proposes, God disposes. So ultimately, that comes out of the greed situation. So they are expected to make the moves, and such greed situation is being studied, and with which I am giving the forecast, so that you will be able to find that the forecast will 90 to 95% work accurately, and you need to understand the forecast properly so that you'll be able to really plan well when to take a sell, when to take a buy, and how exactly you can do the trade still in order to limit the risk. If you keep the hedging order appropriately so that you will be able to see that consistent earning happens. Now, this week, they are expected to make the downward move and they're expected to make the swing and slide during that of the Japanese session, then swing and firm up during that of the European session, and then drop. So an ideal trade will be, since the trend is going to be downward, a firm up, you can take a sell and keep the hedge order, and then when they drop, you book profit. And tomorrow, they are expected to make the dip and the rise. The rise may be significant or may not be significant. In the sense, it may not be a very big rise. It might be a firm up. Only one currency they may do a rise, but the drop they will do it in all because they need to create the US dollar sentiment. So for that, they will make the US dollar gaining move in all the currencies. So then after the rise, you can take a sell, they will slide. Then allow the firm up to happen towards close, and then you try to book profit. Then Wednesday, dip and firm up is expected to happen. Then swing and rise is expected to happen. Wait for the European session firm up, and then take a sell. You'll find the swing and slide happens. Then book profit, either on the US session or the next day, Japanese session, when they continue to make the slide. Then they could make a quick rise in order to induce the traders to do the short covering of their sells when the BOE interest rate announcement happens. Then subsequently they are expected to make the slide. Then Friday, again they are expected to make a small firm up during that of the Japanese session and then slide and then drop during early US session and firm up towards close. So what happens is they just build the sell positions by firming up. And afterwards on Friday, they drop the market to the new lows and accumulate the buy positions against their sell. At that time, many traders follow the technicals and say that, okay, euro has breached all the supports, gone below, then they will try to take sell positions. And to fool them, the players will firm up. And then automatically those who have gone short will come for a short covering. So after the drop, if you sell in the market, or after the rise, if you buy in the market as a breakout trade, then invariably the players try to trap. So after the event, you try to achieve it. It is a herd mentality. So after all the gains, then every person thinks that, okay, it is very easy to do a buy and sell trade because the entire market is bullish. Then they come and buy, and the players find that, okay, all the people who do not know anything about the market have taken the buy positions. Okay, it's the right time to drop so that they become jittery and lose all their patience and liquidate their long positions. This is what happens in the market because the market is able to attract the traders in such a way that when the money can multiply, there are two different types of people. Now, one, they need urgently money and they don't have any proper employment. Then in such a situation, for regular expenditures, they require the money to be earned. And then they go in for a full-time trade, unfortunately, without knowing ABCD of the trading. And they might be making trial and error for 5 years, 6 years, and call that as an experienced trader, but they would not have made money. So ultimately, making money is understanding objectively the truth behind the market. It is not learning the technicals and fundamentals. Understanding the objectives. It is a man-made market. So men trade against the men. So how exactly we should be able to handle situations in such a scenario? And also we should think about the crisis management. And the only solution normally given is use the stop at a far-off place so that when you are having a buy, keep below all the supports your stop so that your stop will not be triggered, but the market drops about 150, 200 pips and hit your stop and erodes 25% of your equity. So the methodology might look all right, but in practical situation, you find that the platform providers, besides the players in the market, they are trying to hit your stop. The stop hunting happens continuously, day in and day out. So in such a scenario, when you come across in a subway that there are a lot of purse lifters and you have to pass through that. And in that process, you have to protect your purse and pretend as if you are courageous, pretend as if you are strong enough to handle situation. If you show your fear in your face, then immediately the person will come and attack you. We don't show the fear in your face and walk through bravely. Pretend at least you are brave, then you become unhurt. So ultimately, you need to understand in what way you have to cheat them. And you have to pretend as if you know everything. So there comes the importance. As long as you want to conquer the human, when they are not in same condition and when they are trying, then they are cunning and trying to trap the traders to lose money. Then you have to be cunning to them and pretend as if you are innocent. You do not know anything about the market and silently trade along with them and earn the money, understanding their intentions. So this is the vital aspect pertaining to the trading. Then the third week of September, 14th to 18th of September, they are expected to show the midweek trend reversal. Probably 15th or 16th, they will try to bring in the trend reversal in the market. And when all people think that Euro and GB are going to collapse, the players will accumulate all their such sell positions and start gaining the levels in a big way till year end. Now, with regard to the levels in which the currencies are expected to swing, so this week Euro could go down to 1.08 or 09 area from the 1.1143, and GBP could go to 1.50, and the upper limit is limited. Then in the case of yen, when Euro and GB are dropping, they are dropping USD yen in order to drop yen crosses considerably. And they are expected to hold around here and then slowly firm up and rise USD yen along with that Euro and GBP during that particular process in order to rise big the yen crosses. And in the case of CHF, they are expected to make a brief dip and then continue to gain the levels on the upside when Euro is making a downward move. And then when Euro started making upward move, they will continue to gain the levels in the case of USD as well as a contrarian move. And in the case of Canadian dollar, they could make a brief downward move and then go to that of the new higher levels of 1.34. And similarly, in the case of Australian dollar, they are expected to do the massacre below that of 0.69 and come down drastically and create the fear. And that will change the entire market sentiment. On Friday, you would have noticed that they had made the drop in the case of Australian dollar, and they have been holding near that of the low. And the GBP, they dropped and recovered some. But in the case of Euro, they recovered maximum. And that has given the confused signal to the traders whether the market is bullish or bearish. So ultimately, you need to understand the commodity pairs lead the rally and lag behind. So the players are expected to continue to make that downward move in Australian dollar and start making the reversal move. At that time, Euro and GBP are expected to come down and then reverse later. As a result, all the commodity crosses, they will just bring in a big downward move and then reverse in the market. Coming to that of the market reading. So I noted down the initial lows and the highs in all four majors of two commodity pairs. And here you come across the levels. At 3:30, these are all the levels, 1.1143. They just breached and formed 1.1141. The high is 1.1174. You would have noticed many of the days when they just simply not breaching the high, breaching the low, and swing, they will slowly make an intentional move on the downside. Then in the case of GBP, 1.5176 is the low, 1.5203 is the high. They are not reached the low or the high. Similarly, in the case of yen, they are not reached the low or the high. Then CHF, they are not reached the low or the high. Canadian dollar also, they are not reached the low or the high. Yes, surprisingly, Australian dollar also, they are not reached the low or the high, excepting euro. None of the other currencies, they have done it. So they are slowly, they could make a down move or make the USD gain move by late Japanese session. If you look into that of the net changes, you find euro is in negative net change and GBP is in positive net change, a contrarian move to drop euro GBP. Then USD yen is in positive net change and GBP is in positive net change. It is another contrarian move in order to gain the levels in the case of GBP yen. Euro yen and GBP yen, they gained the level, and euro GBP, they dropped. So by looking at the majors, you will be able to find out what they are trying to do in the market. But if you find that the net changes are less than 30 pips, that means they are only making small swings in the market in order to handle the process, and they are not very active. Because they want the volume to come in. Only then they will make the whips or moves in the market. Then CHF is showing about 13 pips positive net change when Euro is showing only 6 pips negative net change. So they intend to slowly gain the levels in the case of CHF. Last week they have been holding around 97. They were expected to go to parity, but they have been holding and inducing all the traders to liquidate the long positions around 0.97. And they went up to 0.9770 and came down and hold around that of 971523 and things like that. They are accumulating the buy positions here in order to go above parity soon this week or before the next week mid-month trend reversal. Then in the case of Canadian dollar, you find that they are showing the negative net change. That means USD weakening move. Australian dollar is showing USD weakening move. So USD CAD is in negative net change, Australian dollar is in positive net change. Both are indicating the USD weakening move. Whereas here in the case of Euro and CHF, they are showing the USD gaining move. USD yen is showing the USD gaining move. Only GBP is showing USD weakening move as a contrarian move. So when they make such contrarian move, understand they are handling the process to start with for the month beginning. So as far as the trading strategy is concerned, note down the initial lows and the highs. And when the spread becomes by 3:30 GMT, and when the spread becomes more than 40 pips, you try to understand if the market is near the high during the early or the late session, you take a sell position. The market is near that of the low during early or the late session, you try to take a buy, keep the hedge order to limit the risk, and close it by the end of the session or the next session. That way, you can do the swing trades during the trending time on the downside if you're using a strategic trade, that is buy and sell trade. If you want to do a directional trade of sell and buy, then you wait for the firm up and try to take sell position near the high. Keep stop at entry, and you can even do it as a position trade. By end of the week, you can close it. So these are all the market timings. Follow the market timings. Only then you will find the exact relevance of all the type of moves what I explained it. And also during the early and the late session, they will handle majors. During the mid sessions, they handle the crosses. So if you are trading only in majors, focus the market only during early and the late sessions. You will be able to really understand the moves well and trade at ease. So I'll now take up the questions which are asked here to answer. And if you've got any more questions, you can ask me in the chat window or questions window. I will answer to those questions. Then Indians got a question. Please, may you explain why mid-month trend reversal only done in September? See, there are some months you come across the seasonal trend reversals. I've been talking about it in my trading system webinars, and if you listen to that, you'll be able to understand. And those seasonal trend reversals come once in 4 months. So in a year, you will come across 3 times the mid-month trend reversals, besides the monthly trend reversals. It is very similar to that of our weather. The market also behaves like weather. And people find it extremely difficult to predict the weather. But somehow we come across a lot of devices out there to predict now. But they are not using it for predicting the market. So in market, you come across all the analysts continue to say, give importance to that of the levels, but not to the directions of the market. Then Mario, thank you for your time. It has been very beneficial to attend your presentation. It's very kind of you. And whatever you learned, use it appropriately and see that you are able to earn. See, that is the only expectations from me. Those who have followed it and those who are trying to find there is a value in my trading system. And if you, first of all, arrest loss making and control your emotions, use effective trading strategy, and consistently earn and take care of yourself. And that will be the reward I expect from you. Then Mario, can you kindly advise the Australian dollar median expected price for the week? Yeah, it could go to 0.67 area. Then David. So Euro USD is in gaining strength? No, sir. I've been telling that Euro USD is expected to come down. That means losing strength. US dollar is expected to gain more this week and early part of next week. Hope I'm very clear on this. No ambiguity. Dami in question answer window. They expect USD CAD to reverse. So USD CAD, they are expected to make the wide range swing. It will go to 1.34 area and then come down. Then Radhakrishnan. Fed interest rate decision on 18th. Will this be a trigger for USD weakening more? Yeah, probably even much before that, they could use some input to reverse the market, not necessarily on 18th, and simply say that, no, there is no strength in US dollar, or probably other currencies are beaten down too much. They will simply make a remark and reverse the market. This is what happens many of the occasions. They just show all the fundamentals or whatever the type of data people envisage. They show all those things and say that no, US dollar has to become very, very strong. That's what they will give that impression. Then the traders will develop that mental feel, or they will develop the insight that, okay, US dollar is expected to continuously gain. Then afterwards, they feel like doing sell and buy trade without understanding when they are taking the sell. Then later on, what happens? They will simply ask some analyst to make a comment, or some of ECB president or BOA governor or somebody will make a statement. No, it is too much beaten. That's all. The entire market will reverse. And last time, you know that USDN, they made a big drop to 116. And everybody thought that, okay, that is going to collapse. And suddenly they said that there is an intervention and it came down to 120. Then people thought that, okay, 120 we should be able to buy so that USDN could make further upward move. But unfortunately, what has happened? It has come to 118 level. This is how the hypes are used. If you understand, fine. If you still think that no, market is not predictable and market is huge and nobody can manipulate the market and things like that, that means you are cheating yourself. Then how low the dollar index expected to go down? See, as far as the dollar index is coming, it is not a direct relation to that of all the currencies. Because as I explained that some of the currencies are expected to show the US dollar weakening move and other currencies to show US dollar strengthening move. As a result, the dollar index may not be affected in a great way. So avoid all sorts of the correlations you are influenced to follow. Because every time, this is not the first time. I know very well that the Forex euro was compared to that of the Dow Jones and subsequently to that of Nasdaq and also to that of Nikkei. So from time to time, people will try to correlate the market one to another. And about last year, euro was compared or correlated to that of gold. Then when it has collapsed and things like that, now they are correlating to that of the USD index. So if you think it is going to be a permanent correlations, you'll be defeated. See, ultimately, they want you to lose money. So in that process, if you follow it, then you know that the end is you lose the money. Understand, you should be able to read the market with the appropriate insight. Then may you please comment on the trend of New Zealand dollar. New Zealand dollar is also expected to come down along with that of euro and then reverse. So I do not want to comment on the levels as far as New Zealand dollar is concerned. Currently it has come to 62 level. And when New Zealand dollar is making 16 pips negative net change, Aussie is making 20 pips positive net change. So you come across such moves happen because not many traders take positions in New Zealand dollar and also the crosses. So it is not the major players who are making the moves in New Zealand dollar. That is why I don't touch much upon the New Zealand dollar here, because you need to understand the trick of play of the secondary players in the market. If you don't understand, then you will be trapped. But if you are able to read the primary players in a market, you can effectively trade in euro and GBP. Then Radhakrishnan, USDN, have we seen the low during the last Friday? They could revisit 118, 117, 77. They could come down to and then go up. So they will just make everybody a fool after the interventions today. So it is the question of breaching of trust. No, you trust something to happen in the market, and based on the previous experience, based on the experts' analysis, based on certain important people making such comments, you think that they are responsible And then finally, they simply reverse the market and trap all the traders. That is a way to earn money in the market. So always be cautious and try to read in between what they are trying to do. Then Mario. So, sir, the volatility this week, are you expecting greater volatility this compared to that of last week? No, the upward move will be much limited and the downward move will be more. So, what they will do from that of 1.1150, for example, they will quickly come to 1.1050 and reverse back to 1.1. Then again they will go to 1.1000, reverse back 1.10550, and then drop to 1.09, and then come up to 1.0930. Like that, they will make the moves. So quick downward move, a small reverse. In that process, 100 pips drop, 50 pips gain. Then 70 pips drop, 30 pips gain. This is how they make it. So that anybody who has taken the buy positions during that of the slide will not make profit. Those who quickly grab the position at the lowest level, when the low has not been breached for more than 30 minutes and they try to take a buy, they'll be able to book at least 30-40 pips profit. Otherwise, simply taking that buy, following that, okay, it is a Fibonacci retracement level or it is a pivot point and it is the level where the support comes in and it is a demand and supply you try to commit, they will test your patience. So ultimately, depending upon the volume in different currencies, they make the moves. See, if the volume is high, relatively by dropping 50 pips, they are able to achieve the target. But if the volume is very low, by dropping 300 pips, still they would be requiring the traders to liquidate the positions. So it is nothing to do with that of the volume here, with regard to how much they are going to drop, how much they are going to rise and things like that. So ultimately, how much they wanted to make out of such moves has to be estimated. And we have methods to estimate that, and then we will be able to understand, okay, this is that calamity they can do, and they will reverse the market. So it is purely reading the intentions of the players, nothing more than that. The players use the bank deal room as their handlings, and also the people who can do the trades for them. So ultimately, we need to understand how the dealers are going to do it, understanding their limitations and the privileges the banks enjoy. Then all the commodities, gold and oil, are expected to rise. Yes, gold and oil are expected to rise. And again, you will come across oil coming to about 110, 120, gold coming to 1,700. It will all happen. It is a market cycle. No, every time you come across the market cycle, after the rise, by looking at the bottom, people will say the market has undergone the full cycle. But when they start of the cycle, they will be nervous and uncertain. On the end of the cycle, they will be nervous and uncertain. And ultimately, on a day in and a day out, they become uncertain. As long as you have the uncertain mind and you are not able to take appropriate decisions, then you are only taking chances in the market. Probably you may say it as a calculated chance. And can you kindly comment about GBP? GBP, you know that it's a currency which can easily bring in the sentiment in the market. And relatively, the volume is less in GBP when compared to Euro. The players use GBP to create the market sentiment. Suddenly, they will make a drop in the case of GBP. As a result, people will become afraid. And that is what I was telling you last time also, that they need to make an extended downward move in order to bring in such moves in the market. reversal in the market. So wait for such extent that downward stop point. Then the reversal will happen. Then in the market, where do players make the most money? From retail traders or from the commercial? From retail traders, it is hardly anything. They earn out of their commercials, out of other institutions. So that's what happened most of the time. In institutions, they may trade without stop, but if the equity erodes 15%, they have to forcibly cut the position. That is why they made such extreme moves in USDN to 116, so that forcibly they are expected to cut the position. So such moves are for the institutions. And similarly, USD they suddenly when SNB was telling that we are not interested in pegging the currency, immediately they dropped about 2,000 pips. They are all to trap the institutions. And some of the brokers also collapsed because of that. USDN, have you seen the low during the last Friday? No, sir. They will again revisit this, what I told you. Okay, no more questions. So I'll show the forecast again. So this week they are expected to make the downward move in the case of Euro and GBP, and they will continue to make the US dollar gaining move till mid of next week, and then afterwards the mid-month trend reversal is expected to happen. In the levels are also given. This webinar is being recorded, so you can visit the recorded webinar and get the insight. If you've got any doubt, you can always contact me through email, doctor@iknowindices.com. So Thursday, I'll not be able to come and do the review of the forecast. So I'll come back on 14th of September, next Monday, and give the forecast for the next week. So thank you one and all. Wish you all happy trading. See you on next Monday.